In the latest union budget for the 2024-25 fiscal year, India's Finance Minister Nirmala Sitharaman announced revised personal income tax slabs aimed at reducing the tax burden on salaried employees. Under the new regime, individuals earning up to 300,000 annually will pay no income tax, benefiting approximately 4 crore taxpayers. For income between 300 to 700,000, a 5% tax rate applies, followed by 10% for 700,000 to 1 million and 15% for 10 to 12 lakh. Higher income brackets up to 15 lakh or 1.5 million will see tax rates of 20 and 30% for incomes exceeding 15 lakh or 1.5 million. Additionally, Sitharaman proposed an increase in the standard deduction from 50 to 75,000, providing further relief to taxpayers. These changes are expected to save salaried individuals up to 17,500 annually. The budget also includes enhancements in deductions related to family pensions and employers' contributions to the national pension system, demonstrating a mix of tax simplification and targeted fiscal measures. As India continues under Modi's government 3.0, the budget reflects a dual strategy of implementing potentially higher tax burdens alongside initiatives aimed at stimulating economic resilience and inclusivity. The efficacy of these measures in achieving sustained growth and social welfare remains a critical question as the fiscal year unfolds. Taxpayers and investors will monitor how these changes impact their financial planning and overall economic activities, highlighting the importance of balanced fiscal policies amidst evolving global and domestic economic landscapes.
Stable and moving towards the 4% target. Core inflation, that is.
Let's now listen to what industry experts have to say on India's budget.
Essentially, it's a job creating budget, but with huge emphasis on growth. So it is a budget which looks at the next 3 to 4 decades of growth, and it has immense amount of financial discipline because it maintains the fiscal deficit at about 4.9%, says that it will bring it down to 4.5% next year, and will have a glide path thereafter. So a great amount of macroeconomic stability as well.
I think the first budget of the new government has several visionary steps. If you look at the reformulation of the tax code, the vision to be laid for the financial sector to support development, the incentives that have been given, in terms of credit guarantees, etc. But for me, I think the most important is the emphasis on employment creation.
The fact that we can now use our CSR money for internships, and this again will benefit many of the corporates. So again, an opportunity for job creation, which was the biggest problem. Let's think about it: employment, second, the environment, and third, the economy. And I think that in a way, all three have been addressed.
It's a populist budget, but not a socialist budget. And I see, on balance, more good than bad for the market. The good thing is that they've managed to give goodies to Andhra Pradesh and Bihar without breaking the bank. And they're focusing a lot on education, skilling of the youth, students, women. That's all very important for the longer term good of the country. And I also think it's good that there's clearly fiscal discipline with the target of bringing down the fiscal deficit.
For all the latest news, download the WION app and subscribe to our YouTube channel.